Morning. How's everybody doing? Got to keep this one short this morning, guys. The reason is, thank you for dropping in, is my little boy's off school and he's in the other room and he could walk in here at any minute and cause mayhem. So, got to just keep it light and short. But I thought I'd just check in with everybody and see if you were good after yesterday and see how it was going. I didn't make a trade yesterday, nothing for me. As I've told you, if we're in between that balance area, I'm keeping well out of the market. So for me, this is the balance area, 7 a.m, 8 a.m, as you saw yesterday. Now, as I've said, guys, I have said, haven't I, loads of times to you, that the first push out of balance tends to be a sucker's move, right? Now, look at that again yesterday. Now, there's a system there for somebody. I say it again and again and again, and maybe the system's there for me. Maybe I should be doing this. But look at the first push out of balance there, right? Look at that. What a trap. What a fabulous trap that is there. Here's your 8 a.m. low. There's your 7 a.m. high. This is your balance area. This is what we call the initial balance. And I always say to everybody, the first push out tends to be the sucker's move. It's a trap a lot of the time. Now, if you entered on the close back through into the bottom of balance there, your entry would have been at 1117 and your stop would have been at 91s or just slightly below that maybe. There was a good profit there for you. There was a decent R day there out of it. Maybe 2, 3, 3.5 R, something like that. I don't know. There's definitely profit in it anyway, even if you would have taken profits at this high, maybe scaled some out, I don't know, as you were going higher than this point, or just taking it all off at 50% of balance, which I tend to find is always a decent target for it. I think the 50% area would have been around there. There's a trade there, isn't there? There's a sucker's move, that trading that first move through balance. Look at it was a clean break as well, which I'm sure would have got everybody pretty excited. Now, you know, that tends to be a fade for me. I've seen the probability is that it tends to rotate back up. So yeah, morning everybody. Morning Jesper, how are you doing? Trend the market. Did you get that move, dude? That was a nice move. I always say to everybody, there's a mechanical strategy there for somebody. There's a dude on here called Mechanical Strategies. I would love for him to have a look at that. I'm sure there's profits in there for him. Trading the first move out of balance tends to be, if you're going for the breakout of it, because you've all seen them videos on YouTube, haven't you, like the opening range breakout. But if you're just trading the first break of the opening range, it tends to never be, the hit rate, the win rate tends to be, it's not a profitable system. I did backtest it to just have a quick look at it. I think I did about 2 or 3 years backtesting on it a long time ago, and it wasn't profitable. Trading the first breakout of balance was, because you'd have to argue like your stop would have to go above here, or even above here, or even a lot of them were saying that you'd have to put your stop right the way on the top of the range that you were using, and then it becomes very difficult to make money, doesn't it, from an ATR point? So it's something to think about. But I would be very surprised, right, if you just traded this. You don't even probably need an indicator. Just trade the first candle close back inside and put your stop at the bottom of it. I would suggest that that's a good entry. You can build some decent risk reward into those entries. I know you can. Morning, everybody. So I don't know if you're aware, but they're gonna have to keep this one short, guys, because my little boy's off. If you just entered the room, I'm gonna have to keep it quite short because he's in there. He's off school today. He might be running in here with his Superman outfit on at any point, so which will be fun. Morning, Mechanical. Mechanical, have a look, right? I don't know if this makes any sense to you. I'm glad you're in here. When you get an opening range, right, 7 a.m. to 8 a.m, when you get the first move through on this chart, for a first move through balance, if you were to take the candle that closed back into balance with a stop beneath the bottom of it, so as you can see on this chart, right, your entry would have been at 117 after that 5-minute candle has closed. If you put your stop just below there at 91s, let's say, on the dot at 91s to include some for spread maybe, what would be I think that's a profitable entry. Can you code something like that on Pro Realtime? How you do it? Can you set that up from an input output perspective? Is it possible, or would you need like an indicator on there to give you the mechanical entry? Let me know. I'm very interested. I think it's definitely a profitable system. I sit here watching it happen every single, well, not every day, but it happens. It's highly probable that the first the first move out of balance tends to be a sucker's move. You were on the Bundway yesterday, 2R target, IB high, cut awesome, Lawrence. Hey, that bund, fair play to you for trading that sucker. It just moves, doesn't it? Really slowly, that bond. It's always making me think, to be fair. I back tested oil. Yesterday I jumped into more back testing of oil. Oil looks really promising for my mechanical system. How I trade it. It wouldn't even be. I've been looking at it the day before on Sunday with a different type of setup. More of a retest of the IB and various things happening that would then, but to actually just trade my exact strategy that I am trading on the DAX with oil, if last week alone I would have been over 10R last week alone by trading it. Obviously, I know it's in hindsight, didn't make any money from it, not claiming I'm driving a Lamborghini next week, but it just looks really promising. Now, oil's very volatile at the moment, isn't it? It's in trend mode, so you're going to see way higher type of results currently than you might have in the last year or two. But what I'm going to do is, I think trading my exact strategy on the DAX pays more than trading what I've actually been thinking that worked on oil. I think it trades better. There's more profits there. There's more trades, but there's more profits. What I was doing yesterday was going through, and Sunday was going through a sort of different type of strategy, where you'd just be on a retest, certain things would have to happen and get me in the market. And there wasn't as many trades. There might have only been 2 a week. But with my strategy, my exact strategy, what I trade the DAX with on oil, it looks very promising. There's more trades. There's sometimes 2 trades a day. There's 95% of the time there's a trade every day. So it's promising. And I don't have to change a thing. It is exactly what I trade now on the DAX. Literally exactly the same inputs and outputs, and it's very promising. So I think I'm going to be jumping on it soon. The problem that I'm going to have to do is I'm going to have to just dial my risk down slightly though on it. So I wouldn't want to trade 2% a shot, because as I've said, the loss sequences tend to be more, and the days that you win, you win really big. But then if you miss one of them days, you might be ill, you might have your little lad off, something could happen. It's going to be psychologically pretty difficult to deal with if you take 9 losers on a row, miss the big winner, and then take 9 losers on a row. I know that sequence would be very, very unlikely to happen, but it could happen. So I would always want, if I'm trading the oil strategy, I would just want to dial my risk back in. It wouldn't be 2% a shot. It might be 0.5. It might be 1. Probably more than likely 1 though. So there's Wayne. I sent them videos to some people a while ago on Twitter. I don't know if you've seen them, Wayne. The biggest oil trader on the NYSE, Mark Fisher, trades similar type of an opening range strategy. Now, it's not what I trade. My strategy is slightly different. He trades something called an ACD type strategy, but it uses an opening range in oil. And I think he uses the UK one and then also the American one. So it's like 7 a.m. to 8 a.m. But then I think it's I think the pit one that he uses is 1:30 to 2. 1:30 to 2. Now, I'm not using that. I'm just using the London one from 7 a.m. to 8. My strategy wouldn't include the US one. And I didn't include it when I've been looking at it, when I've been doing some back testing. So, and it doesn't really make that much difference. Yes, you can get some bigger reversals when the US market opens up and tend to give some profits back. But then when the US market agrees with what's already happened in London, they're the days that you get like a 10 or a 12R winner. So I wouldn't be taking that into account. I know people that do though, and obviously they're way bigger traders than me. So mechanical. Don't know if you're still in. Have a look at it, mate. I think there's something there for people. If you're trading this initial balance fade, the first move out, I would just love to know the data of it. It might be something that's like a little gold mine. I don't know where you'd take profits though. I would imagine the first spot that you'd want to take profits would be at the 50% line of the IB, always for a scale, and then maybe try and run the rest to the top of the IB. Now, also the risk reward would have to sit right. So obviously, if you've got a very tight IB, this is something to think about, isn't it? if you get a very tight IB, let's say your IB is like this tight, and then you get a low. Let's say your IB is like that tight, and then you get a low that goes through, but then the 5-minute candle that closes back through IB, like I've seen it happen a lot, where the 5-minute candle is like half the size of the IB that closes you back inside. Now the risk reward wouldn't be there then, would it? Because obviously if you're aiming for the top and your stop's got to go out the bottom and the candle is halfway up the IB, then obviously that's not going to make sense from a risk reward standpoint either. So there is different inputs and outputs that will sort of make you think, catch you out slightly. So I don't know how the context of the size of balance, the move through it, the candle that closes back inside, if that offers the risk reward to at least get you to 50%, and then the top of balance makes sense from a risk reward standpoint, I think it could definitely be a winner. Does that make sense to everybody? Jesper, are you getting long now? No mate, I'm not getting long now, pal. I haven't seen a pullback that I like yet. I call this, right, this is the first leg out of balance for me. People always say like, are you getting long? Well, let me just explain to you what I'm seeing. This is the 7 a.m. high. And obviously, don't trade like me, guys, because the same as saying, I've not made any money for a while. So I'm not the oracle on trading. Please don't think that I am. But I'll just tell you how I would see it. This here, this is the leg that's broken the top of this 7 a.m. candle for me, right? This one. Now, we haven't seen a proper move through yet. I would suggest that this is still part of the first leg that could fail. So for me, I would like us to go a little bit higher, or to pull back into balance a little bit more and then go, and then I'd get long in this point. Or from here, push higher and then pull back, and then on the pullback, then get long again. This to me is still part of the first leg. And you can sort of see that we're sort of still inside this candle, aren't we? The candle here that's broke the balance, we're sort of still inside it. We haven't seen any convincing closes above it. We've had to go there, we've had to go there, we've had to go here, we've had to go here, and we've been pushed back down. So there's nothing there for me yet, guys. Yeah, awesome. You probably got way better at sort of inputs and outputs than me, Mechanical. I just think there's something there, I really do. I see it happen a lot. The first probe out of balance. I think it could be even more high probability on currencies, with like the pound dollar. Because I know when I back tested that, there was them guys, I don't know if you've seen them on YouTube, where they were selling like, he was like quite a Spanish looking dark haired, he looked like he knew what he was talking about, and he was always trying to sell an opening range breakout on currencies. It was all a very sort of polished video on YouTube. It used to be around like 4 or 5 years ago. I think his name was like Miguel or something, but he's an American guy, and he's a massive company, and they were just selling this opening range thing. And I thought that if he's got that many people in his room and everybody seems to be doing that, there's no way it can be profitable. So I back tested it on like pound yen, pound dollar, and I think euro dollar, and it wasn't profitable. The first move out wasn't profitable. These guys were selling this, and I back tested it, and I realised that the actual fade back in was profitable. And I think on currencies it tends to happen a little bit more than the equity markets as well. So you might find, Mechanical, that if you're looking at it from a currency perspective, you might find that if you run a stats on, like, get the context of the strategy together, get the inputs and outputs right, and then run it on a few different things, you might find that it works better on like pound dollar as well, or pound yen or something. That's the beauty of having an algo. Once we have the basic logic, we can test it across all markets. Exactly. Let me know, man. Let me know how that goes. I think it's a winner, I really do. I've seen it on the DAX and I think it's a winner. But same as say, I've also, right, Mechanical, this could be another input for you. When this happens, if we leave it till 9 p.m, if we leave 25% of the position on till 9 p.m, and you take a scale at 50% of the balance, you take a scale at the top of the balance, let's say you're getting long on the fake breakout through the bottom, take a scale at 50% of the balance, take a scale at the top of balance, and leave 25% or 50% on till 9 p.m, because I've seen so many times that when you get the fake out at the low of balance in a bullish trend, that's the low of the day. Like, we never go lower. In the days when we just go parabolic up, I'm sure you can get huge R on the remainder of your position. Because it's a basic trap, isn't it? You trap through going through the bottom of balance, and then that propels the market up all day. Or if you're getting short, you go out the top of balance, you trap, and then obviously the market just moves down from that point all day. I think I got that. I think when I was reading a book, I think there's Tony Crabble or something like that, and he was basically saying that the high or the low of the day tends to be within the first half an hour or something. Forgot the book. It was a really interesting book though. The high or low of the day on a trend day tends to be in the first opening at half an hour. So if you catch that day and you get on a breakthrough, if you're trying to get long, you get on a break fake out through the low, and you've got like one candle's worth of risk, and then you've got the potential to run that thing all the way till 9 p.m. and do no trading in between, by the way. And broker's not getting rich. You're just sat there watching your account get bigger and bigger and bigger as it pushes on. I just think it's a great way to trade. AP Trades, have a look, right? Mechanical Trading is somebody that can do that for you. He's on Twitter. So if you're saying that you'd love to be able to code an algo to make my backtesting so much easier, have a look. I don't know if he can help you out. He seems like a good guy, and I don't think he's like any sort of weird guru type person who's trying to, cream money off people and do anything tricky or, scamming. He seems like a really decent guy. So have a look at him, follow him, guys, if it's interesting and you feel like, because same as say, you can get algos for all sorts of things. It doesn't have to be entering and exiting the market. And I'm sure he can sort you out. Pro Real Time as well, which he does a lot of his stuff on, is all available to everybody. It's on IG. I can get Pro Real Time. It's free. I think you have to do 1 or 2 trades a month of IG and they give it you for free. Now I think he codes it on Pro Real Time. It must be interesting, mustn't it? I know for a fact with Mechanical, if I would have coded my strategy over the last month, I would have made way more money, way more. So have a look at him. He follows me on Twitter, and to be honest with you, he has sent me some of his stuff, and it looks very, very interesting. He looks like, how can I put it? He doesn't look like he doesn't know what he's doing. He doesn't look like he's just been doing it for a few months or something like that. He does look like he's good at what he's doing with what he sent me over. Very interesting, goes very in depth with a lot of stuff. Now, I know it might sound completely ridiculous to think that you can just sit there, drink a coffee, maybe go down to the beach, and this algo is making money for you, right? But if you've got the context set up in your head or a strategy that can be coded, and it is more like an input-output strategy, and there's not discretion to it, I would suggest that it might be the way forward for you. It might be. Now, I'm not saying you're going to make 50% a month or 20, even 20% a month, because I've found that trading by mechanical strategies, I've found them that you don't make them types of returns, right? These returns that people are on about, discretionary returns where they're making 1,000% or 500%, they don't. It's just complete horseshit. It doesn't ever work like that. You can find very good discretionary traders, right? But they're good because they're very good at seeing the market themselves. They tend to be more people who will take more risk as well. I think discretionary guys are. They don't mind a punt. They'll just sort of have a go at everything. But they're also very disciplined as well. I would suggest that most retail traders would suggest, benefit from having a more of a mechanical strategy. Why is that? Well, most retail traders fail, right? Like, I'm not trying to be a dick or anything like that, but most retail traders fail. We fail, don't we? That's the going stat with our career, right? You go to any spread bet brokerage, you go to any futures brokerage, and go and ask the salespeople, like, how many people set up an account and then fail? And I think the stat is that 90% of people fail within 90 days and lose 90% of their account. 90. So you set up your account, within 90 days, 90% of your account's gone, and you're done. But what I'm saying is, if you you're trying to crack this and you haven't cracked it. You find you keep slipping up, you keep making mistakes, you keep hanging on to losers, you keep taking stop outs that you've said you'd get out of, stuff like this, right? Have a look at trying to trade something mechanical. You don't have to be the Goldman Sachs algo to make money from it. You might just make 4 or 5% a month, or even 2% a month, or 2.5% a month. Now that might look rubbish at the moment because the S&P or whatever's like doing 12 or 14% a year, and you might just throw your money into that and you think, well, these trackers are making more than that, but they won't do when the market crashes and you give 8 or 9% back, or 10 or even 15% back, and we don't go back up. That only all looks great at the moment because markets just seem to have just gone up for however long. But you can make yourself a little algo that can make 2 or 3% a month. Like, I know people who would love to retire, right? They'd be amazing, wouldn't it? Like, you could get yourself a little algo together with somebody like Mechanical Trading Strategies. Make 2 or 3% a month. You can't get that from a bank. Even if you threw 10 grand in there, it's a nice little earner. I just think it's the way forward, and a lot of people think they've got to do it, they've got to crack this, they've got to be this discretionary trader that sits there and makes like 10, 20, 30, 40% a month. It ain't happening, guys. I'm sorry to be the guy that sort of like lays it on that. I just don't think it's happening for the bulk of people. Now, will one person out of 100 or 2 be able to do that? Yes, they will. But for 98 of us, it probably isn't happening. So have a look at it. See if it makes any sense to you. See if you've got an edge, and see if you can get an input-output of it, and try and make it mechanical. Mark Wogan sent me something yesterday that's interesting about the Nasdaq and gap fills. Now, I actually do think if you're using gap fills and stuff like that, and you can give yourself a mechanical entry to get in the market when there's a gap, I reckon that could be a real high probability type of trading strategy. But you don't have to stop at one, do you? You could have 3 or 4. You could have like 3 or 4 little algos running all the time. So, you could have your gap fill one, you could have your opening range one, fake out at the low or the high of it. You could also have the continuation one of outside of an opening range. You could have your oil one. You could have like 4 or 5 of them running. I think it'd be really good little way to get yourself a little trading business going. And then you're just monitoring the algos. You can sit here, have a brew, chill, and hopefully just watch your account sort of grow, but slowly, and take the losses, take the loss sequences, take the drawdowns that come, but just grow slowly. I think it's the way forward. If you're losing anyway, that's what I would suggest. I'm just trying to point people in the right direction. Is if you're discretion, you've been doing it for years and years and years, and you can't seem to just get there. Maybe this is the way forward for somebody. If it helps, it might not do. You might think it's a load of rubbish, but if it helps, have a look and see if you can try and come up with something. Use Mechanical Trading Strategies if you want to. Obviously, he seems like a really good guy and he knows what he's talking about. But also go on Pro Real Time and have a little play with it yourself and see if it makes sense to you. It's free. I think same as say if you're with IG, it is free, so it's not going to cost you anything. And you can go on there, you can input and output yourself and just have a mess around with it. It's pretty interesting. I enjoy doing it, to be fair. Yeah, Nick, this is what I love about the DAX initial balance, right? There's no trade for me at all at the moment. Like, the market is telling me that potentially here there's nothing long anyway. So it just keeps you safe. Like yesterday, it just kept me out of all that rubbish. But same as say that the trap through the bottom, it is very interesting when that happens, and it happens more than it doesn't. Check out the 1308 candle. It triggered me long. Big ATR, big volume. So you're on the 1 minute time frame then if you're 1308. Let's have a look, see what he's talking about. I think I know the candle you mean though already. Yeah, this badger. No, 1311. You talking about this one here then? Right, so he's talking, I think I get what he's saying, right? So he's saying that this here was probably the washout. So that was the technical reason to jump in long after this candle had washed everybody out. Yeah, I was thinking you meant this one here at 1311, where we got, I think we just nipped them stops, so we just hit the lows from the overnight session, had we? Here, yeah. So I was looking at that level there, this one, and just how we held that low. They're like so. You see us coming down? Because I was thinking we were going to wash out beneath the actual initial balance zone and be very tight through there. But then I saw this low here and thought we're probably going to have a jump down for that too. As you can see, at 30 I don't think we just tagged it. There. This point here. You could argue, let's say like you were playing it like this. I don't know if this would make sense to somebody, right? So, here's your initial balance low, this point. Let's say you're trading your algo on a 1 minute time frame. I don't know if that would be good or not, mechanical, but let's just say when you break the top or the bottom of initial balance, you just take the first, you take the first parabolic SAR breakout back in the opposite direction. Now at this point you don't know. At this point here, right, you don't know if this thing is going to go back in. You don't know if there's going to be a retest and it's going to go over. But we don't know any of that, do we? It's all in hindsight. This move is, and we know it's already happened. But as we broke the bottom of balance, the first green parabolic SAR, take that one. Like, can you code it off that? The parabolic SAR, the first green one, and then leave it at that. Is that enough of an entry for you? Will you stop beneath the parabolic SAR? Now, what I'm saying to you about indicators is they all work at the same time, so you could probably put anything on there, and you could get a moving average that's crossed over a 20 and a 25. You could put a Donchian channel on there. You would have gone through the top of the Donchian. You could put a Bollinger Band on there. You will have gone through the Bollinger Band top, I imagine. So it's something to think about. Or would you just use the close back through the balance, the actual candle close back through the balance, and like that's enough? Trader Dante's in here, is he? Hey up. Hey up, Tom's in here. Morning, Tom. How you doing? Yeah, that was a great spot trend, the market. That was a good trade, that was, buddy. That candle that puked, it did look like that was like the finishing volume through that level, didn't it? Woolongabba put ATR on it. Yeah, Woolongabba, right? You do that, don't you? You do data sort of. I think you say you a quant analyst, are you? I think you remember you saying. Kurt, morning, Kurt. If you have a DM, I'll screenshot my trade. All right, okay, screenshot over, buddy. I won't be able to check it now, but I'll check it when I get off Twitter. This DAX is just, it looks like it's going to be another range day, doesn't it, guys? Back inside balance again here now. Now, I would suggest this, if we can sort of come into this point, and then we can push back above. Tempted to maybe take a long, maybe. I would have that for me there now is a big enough pullback. I would be tempted that if we got back through it, maybe take a long. But I'm just looking at the dailies now, right? And the dailies look like absolute death for me. As I said to you yesterday, they don't look healthy at all. So it's a tough market to try and get long into this now with how many of these tests down we've had. I actually do think we're going to crack off. I'd be very surprised if we didn't. But who the hell knows? I don't know. But to me, this looks bearish as hell on the dailies. It really does. I think we're going to crack off, as I've said. Matty, morning. Tom, colours a trade if you're in. What have you got for me? Have you got anything decent on? What do you think about these lows in the DAX, Tom? Look at how many tests we've had. You haven't got DMs open on Twitter. Sorry, Trend the Market. Let's Play Footsie. Morning. Right. Let's Play Footsie off Twitter. Yeah. How are you doing? Morning. How are you doing? For the inside balance on DAX, do you use the 7 a.m. to 8 a.m.? Let's Play Footsie. What? I'm sorry to be rude, but what's your name? Because I always see you on Twitter, but I don't know what to cut. Is it Jane? I might be completely wrong there. I'm just having a complete punt at it. But let me know what your name is, because Let's Play Footsie 1. I do follow you on Twitter and I do enjoy your Twitter posts, to be fair. So yeah, but it's the 7am to 8am candle. And I always use the first candle of 8am. So people say, oh, why'd you do that? But I just do because it just adds a little bit more context to the balance. Good, thanks. Right, so for me, that's the balance there, right? There's your 7am top. This is the 7am candle. And there's your 8am candle. That point there, okay. So this is 8am, this is 7am. That's the high, that's the low. So there's the balance basically, guys. If that makes sense to everybody. Justine, right, sorry. Morning, Justine. Yeah, I like that Nasdaq algo that you've got, you know. That looks cool, that does. I've seen you trading that. I think you tweeted it out last night where you got short and you use Hakanashi candles. And you've got like Bollinger Bands or a Donchian channel or like a super trend on there. Looks really good. I really like it. I looked at the setup of it last night. I was thinking that looks really interesting. So yeah, Let's Play Footsie. I think she trades Nasdaq, guys. Jump in, follow her. She seems like a good sort, and she seems like she smashes it, to be fair. But this is the beauty of balance for me, guys. Nothing to do. Nothing to do at this point. And as I've said to you, right, again, the first move out of balance, again, 8-10. What have we seen? It's not like if you're trading that first move out of balance, it's a sucker's move. It really is. Now the 5-minute candle that closed back inside balance here today at 8:15, your stop would have been pulled above that, wouldn't it? You would have been stopped out. So both sides probably wouldn't have made money today. Damien, morning. But yeah, for me, these look bad. These indices do. They really do. I think by the end of the week I would be very surprised if we hadn't have cracked off. Now I've still got to trade my strategy. I've still got to make sure that we're below balance before I initiate any shorts and stuff like that, because it is what it is. That's how I trade. But I'm just trying to look at the bigger picture. I think they look like death. Will they try and push me into taking a long later on? Probably. Like I'm sitting here telling you that the dailies looked bearish as hell. That, you know, they look like they're gonna go below 15k. But if my strategy gives me a long later on, will I get long? Yes, I will have to. Will I feel like an absolute dick for pressing long, knowing that the dailies look like they're gonna shit themselves? Yes, I will still press it though. So it doesn't really make any sort of It won't make me. My overall bias of the markets on the daily won't push me into a trade by taking or fading my strategy or something like that. That's what I mean by it. Still got to stick to it. And sometimes it does put you in bad positions, like where you think you're going to get your arse handed to you. And sometimes you come out and you made a profit and you think, God, my strategy was right again, and my biases were wrong. It happens a lot, that does, to be fair to me. Right, interesting. So it's an envelope with a 21 moving average and a 0.5 envelope. Envelope traded. This is new. I love it. The only envelopes I ever get given are the ones that have got bills inside them, to be honest with you. So I don't know if it's going to be very good for me. I love it though. I assume that's like a moving average envelope where you're playing one side of it or something, or envelopes the price action, brackets it. Looks interesting though. I like how you use Akini Ashes, by the way, Justin. I do like you using Akini Ashes. I don't trade off them myself or anything like that, but I see how they can really help people. When the market sort of flows. They can keep you in, can't they? And they can sort of keep you in the market, keeping like the flows on your side. Because there's so many times, isn't there, when if you're a jumpy trader and you see a green candle and the flow's still down, a lot of times you'll think, oh, I need to get out of it. But with Akini Ashes, they smooth it all off and they'll keep you in. So I do like them. What's going on with the JPY pairs he's passed it? I don't know, Steve. Want to go Japan though? I can help with the GDP of Japan if I get let in the country. I was supposed to be going in September about 2 weeks ago, and it got called off due to COVID. Obviously, you're not allowed in the country. But yeah, want to go massively. Great for momentum. They do, yeah. You look like you jump on all them similar type of momentum moves to me. The election, right? Oh yeah, new prime minister over there, isn't there, Kurt? Interesting. One thing I wanted to say, right? Yesterday I watched a video on YouTube, and this kind of thing drives me absolutely insane, right? And there's this guy called The Moving Average, and I'll just see if I can show you, get it up. I'm not trying to like call him out or anything like that, but it just makes me laugh. It's just unbelievable, the shit that you see on YouTube. Let me just go right, see if I can find him, and I'll just bring him across the screen so that you can I can show you the video that I watched. It's just ridiculous. And people sit and watch this type of shit, and it's just crazy. Let me just put the video on screen slightly so you can see, right? Here you go. Let's see if we can get it over. There you go. Nope. What's going on here then? Alright. Let's see if we can just move this one over. Because I'd like you all to go and watch it because it's such a load of rubbish. How to trade the banks. How to trade like the banks. The Wyckoff method explained in 8 minutes, right? Now, this type of statement that people make is the most ridiculous. It's just so ridiculous. It's just ridiculous. Like, what does he think that when you go and trade for a bank, they give you like the Wyckoff book and say, this is how we trade here at the banks. You're not allowed to press buy or sell unless you've read the Wyckoff method dictionary. Like you have to have read all of this and you have to have passed it, and then we'll give you some risk. Like we'll give you an account then to trade for us. This is how we make money. This is how us banks, Barclays, HSBC, this is how we trade. What a complete load of horseshit, right? And I'll tell you why it's horseshit. And I know it's horseshit because one of my friends who I speak to, Mikos, who's on the stream, does trade with the banks. He is trading with people from the banks. And do you know the type of shit that he tells me? He says that the pound is going up against the euro at the moment because, sorry for swearing, because Morrison's are doing a big deal and they need more exposure to the pound, or they're trying to get out of the, this is why the pound versus the euro, in his opinion, was going up. It wasn't because like the Wyckoff method, the strategy of the Wyckoff buying the low as the euro went low one day, and they all got long on the Wyckoff method because they realised that all the retail people were short, and then they made all the money. And it's like it's the biggest load of shit I've ever. But the guy's got 150,000 subscribers on YouTube, and I just don't understand. Like, is this what people really think goes on? Yeah, I've traded for JP Morgan. Oh, okay, how did your first day go? Oh, they give me the Wyckoff dictionary. I've been looking through it. It's very exciting. They've told me in 6 months when I can recite it word for word that I might be allowed to allocate some risk on the daily basis. Like, what a load of shit. Trade like the banks. Like, what? What does that even mean? What does it mean? That you're getting a spoof orders on the dorm every day and go and do a load of cocaine and toilets every night and go and drink a load of champagne? Like this, that's what the people that trade for the banks do. They aren't freaking trading the Wyckoff method, and they definitely ain't fucking looking at trying to trap retail traders. I wouldn't have imagined. And he's like, this is the thing, right? He's like, oh, everybody, as it went through that low there, in the video, he says the banks brought it up and trapped everybody, and everybody really got screwed. Did they? Well, would they not have just lost one R? Like, what does it mean that when the Wyckoff method happens going through a low that you lose your account? Like, your whole account's gone? You've got really screwed? Or does it just mean that if you would have been fucking stopped out selling the low, you got lost one R? It's just freaking ridiculous, man. It drives me crazy. But people sit and watch it, and then you read through the comments and everybody's like, oh, great video, man, super video already. You're the man. You're the dude. It's like, shut the fuck up, man. I would love to see that guy trade. Love it. If that, I would have a competition with that guy to trade. And I know it doesn't look like I could beat him at the moment, right? But I would definitely have a competition with him. I really would. It drives me crazy. Yeah, it's the ICT, it's the ICT stuff. That's how the banks work. Apparently, you can't go work for JP Morgan unless you've done an ICT course. That's what they ask for now. They don't ask for a diploma or a master's degree in economics or anything like that. No. They want to see if you've done the ICT course, the mastery of the ICT course, or you know what an order block is, or you know what the Wyckoff method is. It's like, shut the fuck up, man. It's incredible. It just makes me laugh. I was sat in bed watching that last night, and I don't follow him. It come up on my history list to recommend you to watch this. YouTube obviously does not know me. These algorithms, they reckon computers are taking over the world, right? Well, they're not, let me tell you, because YouTube constantly shields me videos that just make me angry. It's not what I enjoy. It hasn't worked out yet. Maybe that's what it is, though. Maybe they're the ones I'm more likely to click on because I'm pissed off watching them. I tried throwing a midget at a dartboard while trading at home to be like Wolf of Wall Street. We're on Gobber, right? I'm not suggesting that there is some interesting stuff with Wyckoff. There is, right? But I am not having it for one freaking second that you get given a Wyckoff book when you trade for the banks. And the banks don't trade Wyckoff method. And if I imagine one or two of them might do, but all of them haven't got some secret code where they all trade Wyckoff method. They just haven't. And if anybody believes that, they are too far gone to ever be rescued with this type of shit. They just are. They're not coming back from that point. If they think that every bank trader trades the Wyckoff method and they get given a dictionary with it all in and a plan to say, right, we're going to get short here because retail are all just getting long and we're just out to trap the retail traders, really. It's not like that. Freaking Morrisons need currency. If you're doing a big deal with overseas companies and stuff like that, like currencies have got to move around the world. There's got to be flows. It's not, they ain't looking at like, they might look at I've been told, this is no word of a lie, that by a big bank trader or a guy that trades with the banks, that they do look at the 200 moving average on the daily. That is something that they do look at. Now, whether you believe that or not is up to you, but if as I've been told by this guy who is in the thick of it, I would suggest that they do. That's the only one that they do look at, apparently. Now, obviously, they've all got various techniques to try and get themselves the best price. And I would be very, like the guys that I know that are in prop at the moment, some of them trade very sort of retail sort of strategies, even like a 20 period moving average and stuff like that, making like 15, 20 grand trading a 20 period moving average. Yet you'll get traders on Twitter who'll say moving averages don't work. Don't work. Yeah, I know one guy who smashed oil last week for thousands of pounds trading a 20 period moving average. So don't get me wrong, every individual trader's got their own something that they can lean on and rely on. I'm not saying that some people who trade for a bank, right, they might use the Wyckoff method, but how he's presenting it in that video, trade like the banks, use the Wyckoff method as if all the banks trade the Wyckoff method, that is complete rubbish. Like, it just is. It's absolutely crazy to even suggest that's how they trade, because they don't. And they will all have various ways of getting in the market, and some of them might well have an indicator that they lean on. I'm not saying that they don't work, but to suggest that all the banks trade like that, it's like ICT, right? He suggests that all the banks trade like him. He trades like the banks. They all use an order block. They all use a frickin' turtle soup, whatever he calls it. Like, what? They might, it's just all a sales pitch, guys. It really is. It's to make you think that these guys have got some holy grail strategy tucked up the sleeve. Like, if that was the case, right? If Artie, the bald dude on the video, knows how the banks trade, why is he not a billionaire? Like, why? Why is he on YouTube trying to show you a video about how the banks trade? Like, if I fucking knew how the banks traded, I would be balls deep long that strategy every day of the week, every month of the year, every year of my life. And by 25, it would take 2 years, wouldn't it? You'd be a multi-millionaire. You wouldn't be trying to shill it on YouTube, and you definitely would have had a hair transplant as well. Moving averages don't work. I don't know about that, dude. I can give you a strategy straight away with Longobo. Anybody that says something doesn't work like that, I don't know if you can make that sort of claim with Longobo. Not trying to be confrontational, but to say something doesn't work, I don't know. I would be very careful saying that type of thing, right? Because I know the strategy straight away with the moving averages that I can give you that do work and do make a profit. Now, they won't make thousands of percent, but I can give you a strategy straight away that might make 2 or 3% a month, or even maybe a slightly bigger if you're willing to move your risk to 2 or 3% a trade. But they do work. They do. They definitely do work, but in the right context. So if you're taking every moving average crossover, then probably not. But if you're trading the crossover, then they probably don't. But it's the context that you put them in. So you've backtested 10,000 combos, right, of moving averages, crossovers, I imagine. Yeah? Crossovers don't work. Right, Will Longobo. Okay, mate, no worries. I'm obviously wrong. I'm not saying that moving average crossovers, if you take every single one, work. I'm saying that if you set a moving average up into a context of an overall trade bias, they do work. I'm not one of these people who will say, I definitely know I'm right and I definitely know that I'm wrong, right? Because I think that if you do that and you claim that you definitely know 100%, nobody knows 100% about nothing. Will Longobo, if you think like that moving averages don't work, that's what you think basically. But I would suggest to claim that something definitely doesn't work. You wouldn't know the parameters that I could set up with a moving average, and I would imagine that you wouldn't make thousands of percent like I'm saying, but there's definitely profit there, pal. So yeah, it's the context that you add them in. Nothing will work every single time if you just try and trade it as an input and output, black and white, every one I'm going to take. They only work in trends, right? Okay, so they do work then, but they just work in trends. So what you just said previously, so let me just read this, right? You are wrong, moving averages don't work. And then he's saying they work in trends. Well, that's my point. That's my point, Will Longobo. It's the context, so use them in trends only. Jesus Christ, man. Come on, guys. We're better than this, surely. We're better than this. We surely are. But yeah, Mark Wogan's right. Everyone fibs. Everyone takes fibs and thinks that they don't work, right? For him, they work. It's the context that he sets them up in. The overall bias, the overall context. That's the nuances that you pick up by having the experience as a trader and knowing your market, though, right? So it's having the experience, isn't it, to sit there and watch the market and look at the times and eyeball the chart to see when something isn't working and when you're most likely to make money by using that particular indicator or system, knowing when not to trade, right? And it's the same with Tom Dante's strategy. You could teach 100 people Tom's strategy. I would say a high percentage of won't be able to make any money with it. Why? Because they haven't worked out when not to take the trade yet. That's the key to any strategy. And the problem is, you give anybody a new strategy, they just want to trade it all the time. They see it every day. They see the setups over and over again. They want to get in. But you just haven't got the experience yet. You haven't got the maturity to keep away from the ones that don't look very good. Yeah, that's it, guys. Really, isn't it? Will Longobo, right? So offer us something that does work then, pal. What does work, in your opinion? I'm interested. If you're telling everybody what doesn't work, give everybody in the group something that does work. Is there anything out there? By the way, right, there's a guy that I was speaking to in prop who was saying to me that the worst indicator out there is a moving average crossover because it's too laggy. You don't make any money by trading that system. Now, I wasn't suggesting that moving average crossovers work. They don't. But trading a moving average and putting it into an overall context does work if you got the right context to it. But he did point out that there wasn't the most promising indicator out there was a parabolic SAR. He said that when his firm had backtested them, there was more. You were more likely to make money with a parabolic SAR than any other indicator. Volatility. Yeah, we all need volatility, don't we? I've traded for over 2 decades. I'm a quant. That's awesome, dude. Good for you. We all need volatility to make money. I agree with you. That is one thing that we do need. Let's have a look what's going on with this DAX. It's going to push me in long here. Maybe. Context is one of the hard things to get. Context is everything, really, Damien, isn't it? It really is. Any indicator, I've said it to you loads of times in here. Any indicator will work in the right context. They all work. If you're ever looking at like your winning trades, you can sort of pull any indicator up and they'll all work. But it's the overall context that is the key, basically. And you've got to put yourself in that most sort of favourable context to make money. Now, you might be looking at me here thinking, this guy's going to get long in a minute, this DAX, and I don't think the overall context of the market is there. You'd probably be right, to be fair. But we'll have to see what happens. Are you long, Dave? Nice trade. I hope you smash it, mate. Short-term volatility is greatest at turning points and diminishes as a trend becomes established. So Woolongabba, right? What are you doing at the moment? Give me a trade. Sell me this pen. Give me this give me a trade. Shout me a trade out. Where are you long? Where are you short, pal? Have you got one for me? Were you in anything yesterday? Give me a trade. Just want to see what you're looking at. You don't have to tell me your strategy or anything, but throw me a trade. What you're doing, long and short. Were you in anything yesterday? You been in anything today? Just wondering at what type of markets you trade and what you're looking at. Yeah, for frick's sake, just had a message saying my son's parents' evening at football's off tonight. Called it off again. Long the DAX and Dow. Dave, love it, pal. See, that's what we like in this room. Tell us what you're doing. Tell us what works rather than what doesn't. Everybody knows what doesn't. Everybody's been stopped out more times than anything. We all know that things don't work but in the right context, guys, everything works. If you can set an indicator up or a moving average into the right context, into a bias of an overall context of a market that, like you've got high probability that the context is set up right, and you just use that indicator to give yourself an entry, or you use that indicator to judge your risk from, I think they all work. They do. Same as say, right? Spoke to a guy yesterday, made 15, I hope he doesn't mind me saying it, made 15 grand on oil on Friday. 15 grand. Now, that's not bullshit. I asked him what he was seeing, right? This is 100% truth. This is not bullshit. So Woolongabba say moving averages don't work. The guy, been in prop for 18 years. Big trader. All over the place. He tells me, look at the chart, and he says, I got short here because the 20 period moving average was doing this. This is no bullshit. I've got no reason to lie. It's not me. I'm not saying I made that money. No. I've not made that money. This guy in London, trader, decent sized prop trader, Now, he always makes out to me he's not massive because there's way more bigger people than him, obviously. But to me, he's got some serious size, this guy. 15k on oil. What were you seeing then? Well, I saw this happen, I saw that happen, and I saw the 20 period moving average doing this. Right, okay. So, you know, it is what it is, really. I think everybody sort of sees what they're seeing, and just because you can't make money with a moving average, or you think it might not work, it might just add something to the overall context of what you're seeing at that particular time. And people lean on these types of things, right? This guy has been doing it for 18 years. Actually trading, by the way. Not like an analyst or any quant type of stuff. This guy's actually in the thick of it, trading that discretionary, his own money every day. Pointing and clicking with risk on the line, big time. So he's not analysing, he's not like a coder or an analyst or a quant or anything like that. He's actually trading. He's worked on dealing desks in the city, big ones, right? They were his words to me. Now, he's not on Twitter, can't mention his name or anything like that, but they were his words to me. So take of that what you want. Did the 20 period moving average get him in the market? I don't know. It was probably the overall context of what he was seeing at that particular time, but that is something that he leans on, obviously, to sort of gauge what could potentially be happening. He's, like, we all need visual sort of things to cling on to, and obviously that might be something that he was just looking at to gain him, to just sort of give him the confidence to think, right, okay, would he have probably done it without the 20 period moving averages? I don't know. Maybe that's a question that I can ask him next time I speak to him. But they were his words to me. So think about that one. That's no bullshit, by the way. 100% that is the truth. So I don't know. It's the truth. I don't know. I'm not trying. Will on Gabba, right? I'm not trying to be confrontational or anything like that. But I'm just telling you the truth, dude. Like that's what we said, and I'm not lying about that. I promise you. So I don't know. So I hope that didn't come across as being confrontational, because I do enjoy the chat with Ulan Gabba. He seems like a really interesting guy, to be honest with you, and he does make some very sort of valid points, because a lot of the time, like, he probably has, and I know for a fact that the guy I was speaking to, the trader guy, right, his firm have backtested moving averages, and they've said that moving average crossovers don't work. So I get Wulan Gabba's point, I really do. They don't work if you trade in every single cross of every single like market context. Like, I imagine if you put like a 50 and 100 and you back tested them to every cross get long, every uncross get short, you wouldn't make any money. It's highly probable that you wouldn't make any money. But that's not what I'm meaning by it. I'm meaning, like, I'm not saying that guy was trading off the 20 period. He wasn't taking that as a direct in the market signal. It's just the context that it added to his overall bias and his maturity of watching that market and how it moves, and the things that it might have been, how it was moving, how it was in relative to the opening range, if you use that or something. It's all relative, isn't it? But yeah, I imagine if you traded every crossover of a moving average, you're not going to make any money. I really do imagine that. So Wulan Gabba's points are probably correct. But that's honest, 100% honest thing, that is, about the oil trade. No bullshit. Was it the 20 period moving average that got him in though? Probably not, but did he lean on it? Probably, yeah, he probably did. So yeah, it is valued. It is valued, and I don't want it to seem like I'm trying to be a dick or anything like that, because I'm not. I do value of it. Like, it's not. And obviously, you can't. It's difficult for people to type, isn't it? And I do appreciate that when I'm here talking. But I'm just trying to. All I'm trying to do is make everybody think that it's not black and white trading. It's not. It's all the context and the nuances that you get from watching your market that add up. any indicator works at the right times. You've just got to pick the right times. That's the hard bit though, right? That's the tough bit. That's what makes people a trader. That's the difference between a trade. Like, I'm not trying to be put anybody down for being a quant analyst. You probably make way more money than me, by the way. But I would suggest that's the difference between a trader and an analyst. An analyst can see all the possibilities and all of the trade sort of metrics, the data points. The trader can probably pick the ones that he thinks look the best setups and not get you into the ones where you think something just doesn't quite look right. That's the difference between a trader and an analyst, and that's why at any bank you probably get 3 or 4 proper traders and you get 50 analysts. Like, most banks are full of analysts and quants, full of them. They'll have a team of 20 or 30, maybe even more, but the actual traders, the guys that are putting the risk on, there's not many of them at the bank. There's only a few of them, and they get the bigger money. If you look at the wage structure of a bank or anything like that, the quant analysts get very well paid, but the guys that make all the money, the big dough, are the guys that actually put the risk on. Why? Because the buck stops of them, doesn't it? The buck stops of them. They can get given so many different theories and strategies and stuff like that to get them in and out of the market, and what might not look right here, what might be right here. But the trader knows his market, right? And he's the guy that's obviously put in the risk on. And he might just know his market better than all of that data. And he might just keep his powder dry and think, something just doesn't quite look right here. I can see something on the order book, on the DOM, the flow of the market. Just don't like this. And that's why them guys get paid the big bucks, in my opinion. Yeah, prior day's low. See, this is the thing here, Nick, right? I'd be glad of your opinion here. My strategy is telling me to get long here. I think it's gonna get me into a trade, right? But the dailies look like death. We're right into the 100 level as well, aren't we? Which is worrying me. But we've had 3 stabs. We've had 3 stabs at it. So if this is what I'm thinking, right? We've had 1 stab at the 100, 2 stabs at the 100, 3 stabs at the 100. We've not been able to get above it yet. And I'm thinking, if this gives me an entry here and we get a close above the 00, maybe like 101, I could get in long here and I could put my stop below this low here. And I'd know if I was wrong very quickly, because it's either going to go, and you can sort of see that we might have some sort of measured move going on. You could argue that might be a flag. I don't know, they're all sort of discretionary things that you might look at, retail sort of stuff, but we're consolidating above balance. I've got to get ready here because there might be a long here on this candle close for me, potentially. 1.3. Have a look how that will look when we go through it. Let's see. Anyone watch Squid Game? No, but my nan was talking about it last night. She said it was really good. Is it good, Dave? This is saying up. No. No. Still no. No. Gotta wait for the next candle now. get the deal box off. Yeah, it's mad. I'll watch that, Dave. Yeah, I'm planning to watch it myself, Kurt. It looks good. Just haven't got the time to watch it yet, but I think I will drop on it and watch it. Is it for children as well, Dave? Because my little lad's off school today. I might go downstairs and watch it with him in a bit. Is it something that he could enjoy? For fuck's sake, it's gone without me. We'll have to see. This could be another entry here. Buying the high of the day when the dailies look like death. What a fucking mugs game this is. Preys on the poor and dead. Wow. Right, okay. Over 12s, right, okay. Maybe not then, he's only 6. No, not for the kids. Too graphic. Alright, guys, no problem. Thanks for that. We won't even go there. It looks like it could be Ghostbusters this afternoon. Oh my god. Fucking hell. I aren't buying this candle. No chance. Fuck's sake. It's gone without me. The trade wasn't there though, see? Just obviously sometimes this happens with my strategy. A lot of the time it can keep me out of trouble, but then, like today, now I feel like it's gone without me. Definitely wasn't a trade though. This candle here at 45 wasn't one. Yeah. Did you get any on, Nick? Remember to look to the left. I try not to though, Jesper. I hope you got some on, pal. I didn't get any. I don't like to. I just like, obviously, to try and keep it so simple with me. I just want to look at the balance. Are you thinking that we nipped into yesterday's low and got the close through it? Were you long? Did you get any on? Let me know if anybody was on. Dave's on, isn't he? Dave's called it out. He's long. He's long the DAX and the Dow. Good for him. It's a tough one now for me. This could be the breakout though, guys. This could be the actual breakout of, like, you look at the 30-minute here. It does look bullish, doesn't it now? For all those level traders. Pesky level traders. Look at that for a level that's worked. You could argue that you've got, it's an area, isn't it? And then you've got this move off this low here, down, and then you've just gone through it, and then you've gone up. So these pesky level traders must be making money today. But for me, this consolidation here now on the 30-minute, and you could argue, get your stock charts for dummies book out, you could argue that this is a huge inverse, couldn't you? Like, it does look inversey. Left shoulder, spike low into the head, and then you could argue that we've just rotated into this point here, and at the exact same point of this, we could now build a right shoulder and we could go and probe up. So it might be worth buying this candle here for me. It has given me an entry. It will look like a dog end entry though to everybody, because obviously, you know, if you're a proper buller, you're long in here, aren't you? I've got 1 minute. I'm going to have to make a decision. I'm going to have to get long. But my stop's going to be massive now. So yes, Jesus Christ. This needs to be reduced again. Could even be £1. £1.1. So yeah, thoughts and prayers with me, guys. I'm going to have to get long here. No, it gets me in, Nick. I don't want to be in here though, but it's getting me in here. I'm gonna have to hit it. I'm sorry, it's gonna have to do. There you go, man. Yeah. It's such a retail pattern, I agree with you, Dave, but we need it to work today. Take the plunge, exactly. Gotta do it. We'll see. It's either going to work or it's not. I do say this though, right? It doesn't matter if you're in here. If we're going to have an update, right? This is what I say to people a lot of the time. If we're going to have an update, we're going to have an update, aren't we? So you could argue that if you're long in any of these here, yes, you'll be in a way bigger profit by this point. But if we're going to have a real update, I'm going to get paid. You're going to make more money than me and get paid. But everybody who's got long in here will get paid. I'm just last at the frickin' in the very end of the queue. Oh, I feel like such a sucker for it in that there, you know. Right into resistance too. But it is what it is. My stop's down here, and if we have an update, we have an update. My strategy got me in there, right? Yes, Wayne. Don't even point that Wyckoff Spring style entry out to me, please. Don't even point it out. I can see exactly what he means as well, Wayne. Wayne said that there is a Wyckoff pattern in there. Oh, here we go. I'm going to get turned on straight away. I'm just thinking that if we're going to have an update, I'm going to get paid. But please do not follow me into this, okay? If anybody's following me into this, please don't. Whatever you do, don't. Because you're basically buying the high of the day here. And I know I am, right? So please don't follow me in. If you're in the room and you're thinking, this guy's, you know, going to make money or whatever, don't do it. Get out the trade now, please. Because it's highly probable that it's not going to make money this entry. I know that. But it's my strategy that got me into it, okay? Mechanical... Your hands are sweating, Sierra. What are you watching? Pornhub's on the other screen, by any chance. I've knocked together the basic IB fade algo. Lovely. Nice one, Mechanical. Could you share some basic results without getting too deep into anything that you've you know, thought of yourself, or any sort of stuff that you've done? Please do not do that, Sierra. He's joking anyway. 5% of your account? What's that then, like £2.50? I'm sure you'll be okay. Sierra's got in with £2.50 this morning. Friday's low should be sport now. Yeah, it should be. So if we're having an update, Nick, I'm going to get paid, aren't I? That's all I'm thinking. And if we don't, I'm going to lose 1R, so it is what it is. I don't think you can post. You're welcome to post to me at Mechanical, by the way. You're welcome to do that, but I don't think I don't know if that's something that you can do. I've not seen anybody that can post I've not seen anybody that can post images. I've not seen any on here anyway. But if you can send them to my Twitter, I'll retweet them out for everybody that's in the room, right? So they can all see them, and I'll retweet them to everybody. So, guys in the room this morning, have a look at that. I'm going to get off now because you can all see I'm in the market. So I'm going to go because my little boy's in the other room. But I will send them out to everybody on Twitter and have a look at them. And this is the dude. Thumbs up. Thanks, Nick. Do really enjoy your input to the room, Nick. It's very good. I appreciate it. I appreciate everybody, by the way, being in here. It's all good. I think we've got a good community. I say it all the time, but I think we have. You can't post images or links here, right? Okay. So there you go, Mechanical. Send them over to me, mate. I'll retweet them out to everybody. Yeah, Wayne, it does, mate. It is a Wyckoff pattern, isn't it? Oh, I feel sick. If I would have only got the Wyckoff plan, I would have been in down here, guys. I'm just hoping, right? This is what I'm hoping. I'm hoping that my strategy has a green period, because at the moment it's making me look like a freaking idiot. It really is. It's just getting... I said to everybody a week or two ago, it keeps getting me at the high or low of the day at the moment because of how the moves are setting themselves up. But normally it doesn't do this. It doesn't do this normally. Hey, up. Slightly green. What's going on here? I don't know, frick knows. I'm still not confident. But this is how it goes. Your strategy does this, and it's just a period of price action that we're in where my strategy just keeps randomly getting me in at the high or low of the day because of how I set it up. The moves tend to be all or nothing, and they're just coming late. Normally, the bulk of my moves last year and the year before, it gets me on like these pullbacks and stuff like that. But it's just how it's all setting up. The volatility in the market keeps putting me in at the high or low of the day. It makes me look like a freaking idiot because obviously. And then what's happening is the days aren't running either. They tending to be like reversal days. But I've just got to get through it. It is what it is, and it will go back right. It will go back right, and I'll look like a ledge again soon, I hope. But yeah, thank you. Thanks for stopping in. I'm going to get off. 2R. Nick's got 2R. Awesome. Good stuff. I wish you all the best. I wish everybody a good trading day. And I hope you will get some profits, guys. But see you back tomorrow. Have a good one. And thanks for stopping in.